Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 31st of December. Starting on with the FTSE 100, which ends the year on a, well, I suppose with a whimper, but at least we're above the floor of that rising trend channel. That's been in place since September last year, and we've been within that, apart from an overshoot back in May, for almost the whole of the year. Floor of the channel there at around 80 and above that. We're looking for rather modestly for a move back towards 8200, which is the area of the 50 and 200-day moving averages. Best case at the moment is that we start off January towards 8270, which is a December resistance line. On the downside, obviously there could always be a rug pull back towards the main post-August support there between 7900 and 8,000. Moving on to the DAX, and here spent most of the year in rather better condition than the FTSE, and you'll see why, in the sense that we've had a steeper rising trend channel. We've obviously had that overshoot on the downside back in August, but apart from that, the latest setup here is a bounce off the old October resistance and above the 50-day line there at 19,600. Above that, we're looking for at least a retest of 20,500, maybe by the end of next month. RSI just on the neutral 50 level, so the glass half full at the moment rather than half empty. Moving on to the Dow, and here it's been a case of trying to hold the floor of that gap there from last month. That was around 42,200, and we've been bouncing. We've had sort of a double, triple test of that in the recent past. RSI failure at neutral 50 and also a failure for this market at a now falling 50-day moving average. So really everything depends on holding 42,200 and the November gap floor. And if we do break down, hoping that the lowest we'll see here is 41,500, which was the initial November support and the old August resistance. There is an upside at the moment that looks as though that's going to be capped by that 50-day line, 43,400. That's the blue line there. Moving on to Bitcoin, which has ended the year. I suppose if we'd known that we was going to get to 100,000, be very happy, but end of the year slightly limp. Recent support coming in there at 92,000 on several occasions, which is a positive. Below that, we've got the risk of support on the way up at 85,000, but at the moment it looks as though we might get away with a 90,000 plus support area ahead of a move not only to 100,000 early in January, but obviously a retest of the record level at 108,000. in the first month of next year. Initial trigger here, the 50-day line there at 96,300, so an end-of-day close above that would be a decent momentum signal. Moving on to gold, and here we've also ended the year perhaps not with the glory that we were looking for. We've broken out of that rising trend channel there from February. That's 2630, the level there. Below that, the risk of retesting November support towards 2560. And obviously we'd like to have that over and done with early in January. The real resistance at the moment towards 2650, which is 1 to 2 week resistance. Double failure for the RSI at neutral 50 as well, which is a negative, as is the falling 50-day line. Worst case, I suppose, here is that we have to test the 200-day line and that falling support line there from September around the 2500 level. Moving on to the stocks, and obviously not many to look at today, so it's a mixture of today's and yesterday's highlights. But Cambridge Cognition, a decent turnaround here. We've got rising 50-day line broken, recent neckline resistance at 31 3/4 pence, and looking for an initial move to the 200-day line at 40 pence. Best case would be 50 pence by the end of next month, while we remain above the initial September support there around the 36 pence area. Moving on to one of the best stocks of the year, which, or at least the second half of the year, which is GSTechnologies. Here we've hit so many targets, but we've lost count, but that's the first, second, and the third were hit over the course of October to early December, and the final one here, at least in the near term, around 2.9 pence, fast approaching. After that, obviously, we're looking for a retest of 2021 resistance through 3.25 pence. The recent lay of the land is that we've gone straight up through 2 pence, so probably as long as we're above the old November resistance there at 2.1 pence, we are still looking for ongoing upside at this market. Moving along to a stock where there was some director buying announced yesterday, and here, interesting that Hydrogen Utopia, after moving to new lows, has gapped up on the news of that director buying, and it's a bear trap gap reversal from below the initial December support there at 2.7 pence. Above that, we're looking for at least the 50-day line there at around 3.4 pence. Best case would be 4.5 pence by the end of next month. Kodal's rebounded as well in the recent past and done it quite well, breaking out of that triangle and breaking through the 50-day line there at 0.36. We're looking for up to 0.53 by the end of next month, which is the top of that rising trend channel base from back in October. Ideally, we stay above 0.35. Northcoders is a stock which is also in recovery mode as well, and within a triangle. We've broken November resistance there at £1.71, and above that looking for up to £2.30 by the end of next month, which is the top of that broadening triangle there from back in July. 50-day line also rising, and if you look closely, you can see the 200-day line is rising there as well, and that suggests that we're going into a golden cross and potentially a big move, hence the £2.30 target there, especially while we're above the 170 zone. On to Oxford Biodynamics, where it's interesting the shares are creeping up with the recent fundraise news. Broadening triangle there, top of the triangle there at 2.15 pence, that's a target, while we remain above recent support at 1.2 pence. So let's see if the charting works there. Moving along to Predator, which I covered in my top 25 for 25 yesterday, but here we managed to break back above the 50-day line for the first time since early October. That's around 6.1 pence, and above that we're looking rather simply for the 200-day line at 8.75 pence by the end of the next month. Best case over the next 1 to 2 months would obviously be a move up to the top of that broadening triangle from back in February last year, as high as 13 pence, but at least in the near term, I think 8.75 pence is doable while we're above the 6.25 pence 50-day moving average area. It's always a plus when companies' shares go up, even when it's looking to raise money, and that's the case at Pulsar. Here we've got a broadening triangle, obviously not much charting data, but the shares surged basically last week in a decent way, opening at the low, closing at the high. We've had 2 of those days in a row, which explains the gap higher today, as well as obviously the placing news. The ideal scenario is here that we head up to at least the 29 to 30 pence area over the next few sessions. Obviously, fundamentals notwithstanding on that. Ideally, we stay above 25 pence in the 50-day line from now. On to Rockhopper, which is a requested stock, and here see the shares rocketed with the unfilled gap to the upside through resistance, which is one of our favourite signals. Wasn't actually documented here, but the principle still stands, and obviously we've seen these shares move very well within that rising trend channel, which has been previously drawn at 22 pence above 22, looking for the upper parallel of that rising trend channel base from way back in 2020, as high as 34 pence by the end of next month, but the key here holding 22 pence. On to TinyBuild, which doesn't get much coverage anywhere apart from here. I think here, broadening triangle, and we're heading towards the top of that. The initial target here, 6.9 pence. After that, the upper parallel of that target line as high as 8.5 pence. We're looking for that by the end of next month, while we remain above the 200-day line at 4.8 pence. You can see both the 50 and 200-day lines are both rising now, suggesting we're in the run-up to a golden cross, and that is normally the strongest part of the cycle indeed. This looks like a mid-move consolidation before a move up to that 8.5 pence suggestion. Moving on to Verici, and here we're nearly at the top of this falling wedge formation at 4.3 pence. Above that, looking for the 200-day line and that gap from October towards 6.3 pence by the end of next month. Ideally, we stay above post-November resistance at 3.6 pence. Finishing off with Zenova, which is also looking quite chirpy at the moment. Here we're seeing that the shares have gone to new highs for the month and broken above the 50-day line at 0.65. That suggests that hopefully we'll get to a penny by the end of next month if all things go well, especially if we have more of the turnaround in that 50-day line, which is starting to rise there at the moment. Ideally, we stay above that level at 0.65 ahead of a move towards a penny. That's it for me today. More updates after the holiday.